Good morning, everyone. I want to welcome you all to Tax Resolution Help Center. My name is May. I will be hosting today's session and introducing today's speaker. I will also be coordinating the Q&A chat session by the end of this session. I want to congratulate all of you for taking steps in dealing with your taxes. Taxes from all sources, including income tax, payroll tax, property tax, excise tax, and sales tax, represent a 35% to 60% reduction in your personal savings and wealth. As you probably know, those with 1% of the wealth in this country have experts to help them pay a small percent of tax. Our goal is to help you reduce how much you pay in tax by educating and informing you on ways to reduce past, present, and future tax expenses. We think you are entitled to live a happier, healthier life by keeping more of what you earn and getting the tax man off your back. Our goal is to provide you good information with the opportunity to ask questions that are important to you. This presentation lasts about 20 minutes plus 20 to 30 minutes for you to ask questions by chat. I will select the questions and present them to today's expert. If you wish, you can include your first name and your state. That would be great. Other than that information, your identity is not mentioned. The information you are receiving in this session is not specific tax advice. If you want specific tax advice for your situation, you are free to contact today's expert or any of our tax experts at Tax Resolution Help Center. As you know, these group sessions are included in your do it yourself membership fee of $20 per month. If you are not yet a member, please sign up today. We need your financial support. And to better understand what might be on your mind during the session, I might include some polling questions to ask you. I will then finish with a 5-minute wrap up. Also, a survey will be sent looking for your feedback. And finally, this session will be recorded. The topic for today's session is Collection Statute of Limitations. Time is your friend. The tax expert for today's session is Kelly Calvin. Kelly is a CPA, the chief executive of Everyday CPA and founder of Tax Resolution Help Center. Kelly has been a CPA for over 20 years and helped countless individuals and businesses remove, reduce, resolve past, present, and future taxes so they can live a happier, healthier life. Kelly says he loves seeing the relief his clients experience when they get the IRS off their backs. With that said, introducing Kelly Coughlin.
Hello, May. Thanks for the introduction. This is going to be a short, quick talk today. I've got a bunch of tax work I got to get done, and collection statute is kind of the opposite of current year tax return work. Here's why. Collection statute is the expiration date is in the IRS world. It's a 10-year period of time, and it's the date from which the tax that is calculated today, for instance, in your tax return, it gets filed with the IRS, completed, and then the tax gets assessed at that time. So you file it, then there's a little bit of a lag. Electronically, it comes fairly quickly, but the date that it actually gets assessed, where the IRS says, yep, you owe this money, then there's 10 years that the IRS has to collect that tax debt. Many people get refunds, so there's no tax debt to be assessed at that point. There's no collection issue there, but for many people, there is an amount due, and then the IRS has 10 years to collect it, and you have 10 years to pay it. Many times you can't pay that. So if you get into that situation, you use the expiration date to your advantage so that you might be able to avoid having to pay that tax debt. So it works like this: gets assessed, and you have 10 years to pay it off. So you can, I'm not making any judgments on whether you should or should not pay your taxes. That's beyond the scope of this ethical. That's an ethical question. I'm not going to get involved in that. But what I try to do is help people that do owe money to pay the least amount possible. The assumption there is that if you haven't paid your taxes, you probably are struggling and you can't pay your taxes. Otherwise, you would pay your taxes. So um, let's deal with tax debt that was assessed, say, 7 years ago, and they've been hounding you for 7 years to pay it off. You're approaching that expiration date, the collection statute expiration date, where you could implement the 3Ds here. Determine if the see what the actual CSAD date is. That's the actual 10 years from the date that it was assessed. There might be some things that caused it to be deferred a little bit. If you tried an offered compromise and they kind of put it on hold. So it's not a hard, fast rule. So you want to make sure you know what that date is. And then once you determine that, you might be able to implement a couple other D strategies. Delay the payments if you can, especially as you get towards the end of it, and then defer high payments. So try to negotiate with IRS, and you say, listen, my income is really, I'm struggling this year and next year. Could we start out with $100 a month plan, and then in year two we'll go with 500. In year three we go with 2,000. Right, knowing full well that the closer you get to that date, the more leverage you have. So you do the $100 a month plan now, and that buys you 12 months. You're kind of kicking the can down the road a bit. And then when you get down to the end of the road where it's now, oh God, I got to pay 3,000, then you go through the similar thing. At that point, time is really in your favor. So it's a bit of a chess game, but we like to play it. I love chess, and I can help you play it if you want help. Otherwise, you figure it out yourself and keep watching these sessions and learning more about how you kind of play this game. And I say game loosely. I know it's serious stuff. So that's all I want to cover today. And Maylene, if we have a question or two, I can take it. Otherwise, let me get back to work.
Okay. All right. Thank you for that, Kelly. Yes, we do have one question here. This is from Zoom, and it's from Shannon. Her question is, when will the IRS ask you to extend the 10-year statute?
Yeah, I think I got that question last year, and I don't have the complete answer to that. But if you get a situation where the IRS is asking you to extend it, generally the answer should be no. But I would say you get some help really assessing that. But generally, the answer would be not only no, but hell no, unless there's some reason, compelling reason that would work in your favor, not their favor, to do that. So that would be my answer there.
All right. Well, thank you for that answer, Kelly. Is there anything you want to add? That's our last question for this session.
Nope, that's it. Thanks for having me, and I'll talk to you next week.
All right. Well, thank you also today for our session, Kelly. It's definitely beneficial to learn more from a tax expert as yourself in order to us to do a better job with our taxes. Thank you also for today.
Yep.
All right. And I want to also thank you, all of you, for joining our session for today. And that's it for our Q&A part for the session. And our commitment is to help you reduce your taxes and increase your wealth. We do this with the TriTax method of DIY, do it yourself, DIT, do it together, and DIA, do it all. Three methods, one solution, reduce stress from no IRS and state tax debt, and a happier, healthier life. If you are not yet a member, please join for less than $20 per month. We need your support to continue to offer more of these sessions. Since it is not now tax season, we have many sessions to help you do a better job of doing your taxes yourself. And of course, if you want help, we have a team of experts who can do your tax return for you. Please check out our website at taxresolutionhelpcenter.com and please join as a member today for $19.95 per month. Thank you all for attending and have a wonderful day.